Hi viewers, welcome to Mantan TV. Today we are with CA HANMANDLOO sir. Today is Income Tax Day. Sir, good evening sir.
Good evening.
Sir, happy Income Tax Day.
Nobody will be happy to pay income tax.
Yes sir. Sir,
Of course, it is a happy income tax day for tax compliers, taxpayers,
taxpayers.
genuine taxpayers.
Sir, from when they are celebrating this day like this, happy Income
See,
Tax?
actually, this income tax was introduced in 1860 in the British government to collect the taxes in the form of taxes for the losses incurred due to first independence what we'll call independence war, something like that, in
Okay.
1857.
Okay.
Laxmi by fought British government for independence. In the first independence war, something it is treated as something in first
Yeah.
independence war. To recover the losses incurred by the British government, the government has introduced the income tax from 24th July 1860. 1860, it was the day 24th July, it was started collecting taxes on incomes earned by individuals, businessmen, anyone in India.
Sir, what are the key objects of this tax day, sir?
See, objects of the tax day is income tax
Yeah.
awareness.
Oh.
See, there is, see, in India, now there are only 10% are taxpayers, 90% are not taxpayers. Means only 10% people are paying taxes and 90% are not paying taxes. Out of that 90%, 70% may be not liable to pay tax, or 20% may be liable, they may be having exempted incomes. Means 70% depending on farmers who are not liable for income tax. Those others 90% may be below taxable limit. Means those who are earning less than 7 lakhs up to last year, current year 12 lakhs per annum. So this is to know about the awareness. Why a citizen should pay the tax? Why a person who is earning more has to pay the tax, but not the people who are earning less? See, every person who is earning more has to feel is responsibility to contribute for the development of the nation.
Oh.
What the nation gives to the taxpayer? It will give social security, health care, internal security, education, environment, everything, administration, all these things will be protected by judiciary also. All these services are provided to all citizens, but all citizens may not be able to pay the tax, but only those people who are earning more may be in a position to contribute to meet the expenditure of the nation towards social welfare, health care, education, all these activities.
Yeah.
Means
Sir, how
it's-
many years has been completed, sir? Like this, all IT filings and all.
See, actual income tax India came into after 1860. One act was passed in 1922, Income Tax Act, old act,
Okay.
and another act was passed in 1961. Until now, we are following the Income Tax Act 1961 only. Now the government has came to propose to introduce another bill from Income Tax Bill 2025. Now it is in the Parliament for approval. If it is approved, it will implement from 1st April 2026 onwards. So main object of the income tax day is compliance. Means every person those who are liable to pay tax has to pay the tax. It is not sufficient. Payment of tax is not sufficient. You have to file the return also. For what purpose? For what is the income you earned? What is the expenditure you claimed? How much is taxable? And how much tax is liability? Income on how much income liable for tax and how much tax liability? How you have paid? That is important. Generally, what people feel, my tax is paid by the bank or my tax is paid by the employer. I did not file the return.
Yes.
It is not like that. See, whatever the tax paid by the payer, maybe interest, dividend, employer, anything, that is their responsibility to collect on behalf of you and pay on behalf of you to the department. But your responsibility is when you are earning money, you have to file your return. It is a first obligation on your part. File your return and pay the tax and file your return. Without paying the tax, you cannot file your return of income. you should pay, then only you can file the return of income.
Right.
That's the
How
must.
it can be calculated, sir?
It depends upon I told you, last year it was up to 7 lakhs, there was no
Okay.
tax liability. But tax starts from 3 lakhs onwards.
Okay.
Suppose a person is earning 6 lakhs 50,000. He need not pay any tax. He need not file return also.
Okay.
He has to file his return, but he did not pay tax.
Tax. Okay.
Up to 6 lakhs 50,000, the exemption benefit is there. Suppose the person is there 7 lakhs 50,000 last year. So the tax liabilities are 7 lakhs 50,000. It starts from 3 lakhs onwards.
Okay.
So tax will be calculated on 3 lakhs to 7 lakh 50,000, and that the tax liability will be reduced by 3 lakhs to 7 lakhs tax. So the ultimately the tax will be only on 50,000. By every person who is earning more than 3 lakhs has to file his return of income the last year. But the current year is 4 lakhs. Whether you are liable to pay tax or not, you have to file your return of income. Tax liability is different, tax filing is different.
Paying.
When your income is more than 3 lakhs last year, 4 lakhs current year, you have to file your return of income, even if you are not liable to pay any tax. And if you want to get refund, suppose your income is only less than the taxable limit, but you have already been deducted by tax employer, means bank has deducted in interest on TDS and interest, or salary, or contract payments. Maybe even if your income is less, but you have to file your return of income to claim the refund.
Yes.
From the department. That is ITR filing is important. Means the ITR filing is most important to get the refund, to confirm that your income is accepted by the department. And next, another thing what we have to do is, on this income tax day awareness, is we have to explain the details of what are the tax exemptions, deductions, tax policy regimes, how the income tax department acts, how to file the return, what are how are the options available to file the digital filing of return, faceless assessments. All this has to be made aware to the taxpayers. This is income tax day importance. How it is issuing refunds, how early it is issuing refunds, how TDS is to be reconciled, how it is to be, how the information between the various departments will be shared with the income tax department. See, if you purchase the property from one person, the registration office will send the information to the income tax department. This person is purchased, this person is sold, and this is the value. And if a person has purchased, made a deposit in the bank will send to the income tax department, the person has made a deposit this much, and we are paying him interest, and this is the interest amount we are paying to them. All these details will go to income tax department, and the income that is called annual information return.
Okay.
That is every 6 months, these people will file to. There are 36 departments has to file information to the income tax department.
Sir, what are the significance of this income tax day, sir?
Significance means it is important because every person wants to reduce the tax liability. Every person, because it's hard-earned money, there is no reimbursement if there is a loss from the government side. But if there is income, you have to pay the tax. The government will not share if you are in loss. Government will claim only if you are in gains, profits. So we have to be careful while paying the taxes. We have to make provision for tax payment also. And this is liable for all profits earned by individuals, companies, anyone, public organization. All these are important. Significance is what is this? We have to simplify the tax basis. Tax process has to be simplified. Transparency, and reduce the tax evasion. What is happening is tax evasion. Those people are paying the taxes, they are sincere, and some people are not paying at all. They are feeling that they are comfortable. So the taxpayer is feeling that I am unnecessarily punished. But the people who are not paying are feeling that we are protected, we are saved. But after the introduction of technology into the income tax department and information received from 36 departments regularly, now it is very difficult to prove that, to evade the tax. You can avoid the tax, but you cannot evade the tax. Avoiding means tax planning. Evasion means totally misrepresenting or saying that I don't have income even if you have taxable income.
Okay.
So all this is coming with the income tax department, annual information return to the income tax department.
Right. Sir, how did this income tax contributes to the development of India, sir?
Generally, all this, I told you this social security, defense, healthcare, administration, education, environment, drinking water, and means all these facilities are provided by the government free of cost. But who has to bear the cost? So those who are able has to bear the cost. At least those people who are not able, those who are under income or they are not getting sufficient income, they can be excluded. But those who are earning a higher income, let them be paid. Means more income, more tax. No less income, less tax or no tax.
Sir, what are the common myths of this income tax?
Generally, what they feel is, I told you last time also, people feel that those who are paying taxes, they are paying. There are some people who are avoiding, even having taxable income also. But now, because of artificial intelligence introduction, and generally the salary people will feel that we cannot reduce our tax liability because it's already paid. Everything is coming through banking channel. You cannot avoid, but the business people can avoid the taxes. Okay, this is a myth. Means this is not the truth. This is a myth. Salary people, because they are protected and protected environment, there is no risk to their life. They have to pay tax on them. But a businessman, they will be faced every time. They will face the risk. They have to carry on the business and they have to protect from so many disturbance also. There is no security for their income. So there is a possibility of planning the tax to reduce the tax liability.
Sir, how did this income tax department made this tax to pay easier, sir?
I told you this we have to pay. Now earlier it was not like that, but still 3-4 years, 2021 onwards, income tax department is giving you the information. What is the information available with the department about one person? How he has earned money, how he has, where is his deposits, where is his shares, how he has purchased the property. All these transactions, this information received from the 36 departments will be shared by the income tax department through annual information report to the taxpayer. This is earlier it was not there, before 21 it was not there. After 21 only this came to existence, and one person can know what are my transactions, what are my assets, and because everything is digitalized, every information go to the department, and you can file your return income based on the information available, or you can disagree with the department that information by filing the feedback filing objection through feedback with evidences. Suppose the income tax department says you earned a rent of so and so property, but it is not yours. When it comes to your information return, annual information return, then you can say that in feedback you say it is not my property, it is not I am not the owner of this property, the rent should not come to me. If you give the evidence, they will be right, or they will search for the real owner. So this is happening in income tax department since last 5 years, and everything is the income tax return is the communication between the taxpayer and the income tax department. So you have to file your income tax return before 31st July of every year. Last year 24-25, now you have to file before 31st July 25. But of course, the date is extended to 15th September on. So the extension may be possible, but generally it will be 31st July for the previous year.
Sir, can you please explain about the old tax and new tax?
The old tax regime was there, and new tax regime is there. Earlier, old tax regime was taxable income arrived from gross total income after claiming deductions and exemptions after gross total income. Means gross total income will be reduced by deductions, then the taxable income will come, and then it was old tax regime. But exemption is the same, no difference. But in the new tax regime, what the government said, because of many false claims, fake claims, wrong claims, income tax department introduced a new tax regime. You don't claim any deduction, you pay the tax in the new tax regime. That is 7 lakhs exemption. Earlier 2.5 lakhs exemption.
Hmm.
So now currently it is enhanced to 12 lakhs also. So how this is happening is old tax regime deductions are available, new tax regime no deductions are available. But the limit is exempt, enhanced. 2.5 lakhs to 7 lakhs. Now it currently at 12 lakhs. Earlier it was only 2.5 lakhs. Old tax regime. Earlier old tax deductions were there: insurance, PF, children education, medical health insurance, all this electric vehicle interest loan, housing installment, all these deductions were available. Now I reward all these deductions, you go for new tax regime. This is your gross total income, no deduction will be available up to 7 lakhs. Now it is current year, it is 12 lakhs.
Okay.
The new tax regime, when you want to file your return of income, you compare with old tax regime and new tax regime, which is beneficial to you, you can file it. But if you earlier option was given, now it is like that. If you opt for old tax regime only, you are eligible for old tax regime. Otherwise, new tax regime is invariably you have to follow new tax regime.
Sir, what is this tax liability? What can we explain about this, sir?
Tax liability. This is in tax liability, tax liable.
Liability.
How we are tax when you are tax liable?
Yeah.
Suppose a person is earning income of 24 lakhs. So he has to pay tax at 24 lakhs.
Hmm.
Okay. So on this 24 lakhs, what is the tax liability? Your employer will make a calculation and will deduct every month. Suppose it's coming around 1,50,000. Every month, one employer will deduct 12,500, 1 lakh 50,000 will be deducted. And on 24 lakhs, you have to pay tax. Okay, this is tax liability. The income is 24 lakhs, tax liability is 1.5 lakh. It is paid by employer on behalf of you. So this is tax liability. And the tax leviable is, and then suppose you are earning yourself, nobody is paying to you, or business or contract or anything like that, your profession, then when your income exceeds taxable limit, you have to file your return of income and you have to pay advance tax in 4 installments, each 25%, June 15th, September 15th, December 15th, March 15th of the current financial year, you pay as advance tax, and then your service reduce that tax, that advance tax will be reduced from the tax liability while filing your return of income.
Right. Sir, if you miss the tax date of line,
Yes.
the expiry, I mean the day.
Yes.
So, what are the next steps?
See, if we have missed the tax filing of return before 31st July or extended date, we can file along the return of income up to December by paying late fee interest on tax.
Is it possible, sir?
Yes, it is possible. We can file return up to 31st December. Earlier it was some 10 years back, it was 4 years time was there. Reduced it to 2 years. Now it 1 year. Now it is reduced to only December. And now new option is given. Update belated returns.
Okay.
Means if you could not file return before 31st December, now you have to do is we have to go for updated return. Means updated return is if the return delay is more than 12 months, you have to pay 25% extra, the tax. If the delay is more than 12 months to 24 months, you have to pay 50% of the tax. If the delay is 24 months to 36 months, you have to pay 60%. If the delay is more than 36 months to 48 months, you have to pay 70% of the tax as additional tax. That is called updated return.
Sir, what are the main steps for the first taxpayer, sir?
Main is first taxpayer, he has to verify his bank statement, how you are getting, when you are getting your income, and how it is created. Suppose the employer has not deducted the tax. It is your liability to see your bank statement, then you have to pay advance tax. If the employer has already paid, you do not pay the advance tax. And if your income, you are having other income also, then you have to pay tax and advance tax along with the TDS made by the employer or payer.
Okay.
So all these are possible provided you know something that you have to pay your tax liability.
Okay. What are the major changes you are expecting for next financial year, sir?
See, the new income tax is going to come from 1st April 26 coming year, and for the existing year, the tax slab is increased from 7 lakhs to 12 lakhs, and so many benefits are given. So the extended benefit is there. So for the current financial year, compared to previous financial year 24-25 to 25-26, the people who are earning less than 12 lakhs, they are saving 80,000 tax
Okay.
per annum. Those people earning more than 24 lakhs, they are saving 1,10,000 per annum because of enhanced slab from 7 lakhs to 12 lakhs, and also slabs. This is the change happened, and from next financial year onwards, new act is going to come. This is in the parliament to be approved.
Sir, how does this GST work, sir?
Before that, we'll go for residential status.
Yeah, residential state.
What is a resident status? A person who is in India more than 182 days, more than 6 months in India, 182 days total together, not at a time.
Okay.
Maybe he's staying 1 month and went away, again came back to stayed 2 months. And if he stays more than 182 days in India, he will be treated as resident India. So when he is resident of India, all his income in India earned in India will be liable for tax in India. Also, if he is having other source of income outside the country, also he is liable to pay tax in India and in India itself. Global income is not taxable in India, but whatever the tax paid outside India will be given benefit from the tax liability. So 182 days and 360 days, 60 days in last, 60 days plus 365 days in previous 4 years. That is resident status. Means 182 days in India or 60 days in the financial year. Plus, in previous 4 years, you should be in India for more than 365 days. So this is main happening in the case of resident status.
Okay.
Many people are feeling that they are staying outside India. So they are staying outside, they came back to India, and they are staying in India, they are feeling that they did not pay any tax liability. But when you are resident in India in more than 182 days, you have to pay tax liability, not only from Indian income, you have to pay tax on global income. One thing, those people are going outside India, from India, they should verify whether they are staying in India more than 182 days or less than 182 days. If you are staying in India more than 182 days, you have to pay tax on income and outside India also. So this is residency is importance. And
Sir,
what?
Do you have any points on this again, ITR, sir? Some more points, I mean, other than this.
See, all this, what is happening is another GST you asked me.
Yeah.
Now the entire entire department, central government department, maybe GST, income tax, capital market, registration department, share market, debentures, bonds, everything is digitalized. Even savings, bank deposits also digitalized. So everything is information available in the income tax department, and GST is for turnover only.
Okay.
GST concept for turnover or services, maybe rent or services provided. That is services. Goods and services only will come under GST. And GST turnover also will become part of the reconciliation, part for reconciliation with the income or turnover report in the income tax department.
Okay.
Suppose earlier, suppose your GST turnover is 40 lakhs, but you have showed the income tax department 1 crore 40 lakhs. So the GST department will ask, what about the 1 crore difference? You are liable to pay GST. Suppose you have shown 1 crore 40 lakhs in GST, only 40 lakhs income tax. Income tax department asks, you have shown 1 crore 40 lakhs, but you are showing only 1 lakh, 1 crore here. So this is the inter exchange of information is available with the income tax department, with the finance.
So how does this GST and income tax department works,
GST
sir?
is goods and services tax. It is only liable it is liable payable by every Indian. If you buy a small item also, you have to, if you go to a hotel, you pay the tax 5% GST. If you purchase small toothpaste or brush or anything also, you have to pay GST. Every person who is buying is to pay GST. Income tax is liable only for the people who are earning more than 12 lakhs per annum.
Okay.
Means more than 4 lakhs per annum and 5 lakhs, more than 4 lakhs per annum, but liability comes only after 12 lakhs. And different varieties of incomes are salary, house property, profits and gains, profession, capital gains, and other sources. These are the deductions available. These are sources of source of income considered for Income Tax Act. And whichever is not liable under any head, all will be clubbed in income from other sources.
What advices can you give for the young viewers, sir, for upcoming taxpayers and all?
What you have to do is you have to go for your bank statement is the best source. You verify how much your cash you have received in your account. Then you see what is your source, salary or sales or purchase, anything like that. Then you file on the return based on the bank statement. You need not go for others' information because it cannot be more than your information. It is your money. There is evidence that you are received through bank. So you cannot reduce that. So you go with your bank statement, first source, then information received from your employer or payer, those who pay contractor service or anything like that, sellers or anything, that is that information. And bank or interest or anything, dividends are like, all these are sources. So for this there are so many tools are available, means what we call tax computation tools are available. You can use any one, or you can, if you cannot not possible, you can consult a professional to take expert advice on filing the return of income. This is for the first time. Even every taxpayer also it is better to go for a professional rather than filing directly. May not be possible because for health problem we will go everyone to doctor. We cannot go to medical shop. First we go to the doctor, then we will go to medical shop. In the same way, if you are having a wealth problem or income tax problem, go to a consultant, then file a return. Then you get at least expert opinion is available to you. That's the most important. And but you can have the discrepancy also.
Okay.
I showed you feedback. You can through feedback you can ask for rectification of discrepancy if any is with evidence. Evidence is most important. Without evidence, you cannot claim any support from the department. And one thing is, other thing is, every person who is tax liability is more than 10,000, they have to pay tax, advance tax, 4 installments, 25%, 20%, June 15th, September 15th, December 15th, and March 15th. That's important. And other one is, so deductions now it is not possible under new tax regime. And one thing is, these freelancers, generally freelancers, small businesses, people will feel, when they cannot maintain the records as required under the Income Tax Act, it's better to offer a tax income or presumptive taxation is there. If you are a professional, you can declare 50% of income, receipt as income, and you need not maintain any records. And for a small business, if your income is turnover is less than 1 crore, you can offer 8% tax and pay the tax. That is sufficient. You need not maintain any records as required as per the requires. But presumptive taxation is there. And one more thing is, if the department is not satisfied with your information filed, evidence filed, the department will convert your return into scrutiny. It is called scrutiny assessment. They will call for information. Earlier they used to call for personal hearing. Now they are not asking. Faceless department. Now everything is faceless income tax department. You can file your information on portal, and the department will send notice on portal, and everything will be on portal only. You don't know who is the officer, assessing officer, and the assessing officer doesn't know who is the client, who is the taxpayer, and then everything will be commensurate through portal only. And after that, the assessing officer will pass the order specifying this income accepted or addition made, and then he will raise the demand. Then based on that, if it is not acceptable, the taxpayer can go for appeal.